Hey everybody, and a warm welcome back to our channel at Bru Krebs with me, your host, Bru Krebs. Hey, are you curious about the many loan options available to match your specific financial needs? Wondering how to identify a trustworthy lender? Maybe keen to hear the latest buzz from both buyers and sellers in the real estate market? Today, as we continue to explore the world of real estate on our YouTube series, we're diving deep into the lending aspect, providing insight into these topics and beyond. Of course, if you have any questions as you go throughout the video, whether they're for myself or our guest, Carol Lynn Upshaw, don't hesitate to drop them in the comment sections below. We're eager to address your inquiries. And if you want a more personalized discussion, please feel free to reach out to us. You can text us or call us anytime. Our numbers will be in the description of the video, as well as they should show up on your screen here in just a few minutes as well. And if you have not already, please consider subscribing to our channel and hit that little bell button to be notified when those new videos come out. We have a great video for you today, so be sure that you stay tuned to the end of the video so you don't miss a single thing. Today, I'm thrilled to have Carol Lynn Upshaw from Hyperion Mortgage with us. She's here to help guide us through the essential details you should be aware of and share her insights on the current market dynamics. Carol Lynn, it is a pleasure to have you with us today. Thank you so much for being here.
Well, thank you for asking me, Bru. I'm excited.
Great. I am too. You know, we've worked together for a long time, and I know you're a valued expert in the business. Do you mind giving us a little bit of an overview of your position and the bank that you do work with?
Oh, not at all. I am a loan officer with Hyperion Mortgage. I've been in the business for about 30 years now. Had my own company back from 98 to 2010, and then went into the banking aspect of it and have been with the bank ever since, on and off.
Well, let's dive right into the burning questions everybody's got then about securing financing for homes and refinancing their existing ones. And I'll be delivering these questions in quick succession, so make sure that you stay tuned to the end of the video to catch every single detail, including the current thoughts of buyers and sellers that we're seeing out there in the marketplace. So Carol Lynn, you talked a little bit about licensing experience. You said you've been licensed for 30 years. Any other professional credentials that you'd want to share with our audience today?
No, not necessarily. We keep up with continuing education. We're licensed in about 8 states: Georgia, Florida, Alabama, South Carolina, North Carolina, Pennsylvania, and New Jersey.
Wow, that's a lot.
And
that's
Tennessee.
A large reach.
And
that's
Tennessee.
A large reach. That is a large reach.
It is a large reach.
What types of loans do you guys offer? You know, which are more suitable, for example, for first-time buyers, and what might be more suitable for an investor?
Well, for first-time home buyers, we've got the conventional Fannie and Freddie that allow 3% down payment. And we have, of course, FHA, which is minimum 3.5% down at all times. And that would be based on your credit score, if it was a little bit lower, or if you needed a little bit more for debt to income, if your income wasn't as high as for conventional, because the ratios are a little bit different on both of those. So I would just talk to the client and find out what they qualify for, and then I could guide them where they needed to be, whether it was FHA or conventional.
Okay, and
or
so
non-traditional.
Your conventionals would be your more typical home buyers. So
Yes.
you see more of your first-time home buyers going to the FHA, you know, government-backed rate, lower down payment programs than the conventionals, or do you see them doing a mixed bag of those?
Well, I see a mixed bag. It all depends on all the particulars that go into the pre-qualification: the credit score, the income, the debt, all of that.
And all those are different, right? With every single customer.
Every single one of them, case by case.
Every single one of our every single customer. Tell me a little bit about investor types of products you have. Do you have any specific products that might work for investors?
We have the Fannie and Freddie conventional, but what I've been doing a lot of with my investors lately is the debt service coverage ratio, the DSCR. It's 20% down minimum credit score 680. And we've got it on fixed rates, adjustable rates, interest-only options, with prepay, without prepayment penalty. But the kicker on this is there's no income verification. All we verify we get a credit report. The underwriting is based on the appraisal and the rent comps.
So what you're saying is basically you're putting 20% down. There's no income verification. It's based on what the rent rolls are and then how much the property is worth.
Well, it's based on the rent comparables.
The rent comparables.
not the rent rolls.
Well, the rent, that makes sense. That makes sense.
Yeah. And then we just verify funds to close and reserves.
So they don't necessarily need a historical rent roll. They just need to be able to project that it's.
That is correct. It doesn't even have to be currently rented. You don't even have to have a lease. They're going to go off of the rent comps.
That's a fantastic product.
Oh, it's an awesome product.
That's a fantastic product. Well, tell me. Go ahead.
I was just going to say it's minimal paperwork for the borrower, and investors, they kind of want to turn and burn. So it's been a great product.
That makes a lot of sense, and that's a great product to have. What's the process for pre-approval? And we probably should talk about pre-qualification versus pre-approval, because I think a lot of people don't know that there's a difference between the two of those. Maybe kind of talk about that. What's the difference between a pre-qualification and a pre-approval, and how much time does each one of those take?
Well, the timing is about the same. If I have a client that just calls out of the clear blue and wants to be pre-qualified to see what they can afford, then we start there, and I just get information such as their income, their debt, and they can tell me what their credit score is and what their situation is. If they want to be pre-approved, then I send a link to the loan application, they fill it out, send it back, and I do pull credit then and run it through the automated system. And if we get DU approval, which I'm sure you're familiar with, it's called desktop underwriting, then they're basically pre-approved. They just have to back up what DU asks for when we send it to underwriting to get our final approval.
So obviously, we as a real estate professional prefer a full pre-approval, because you've gone through the documents, you've got through a clearer picture of what's really going on than a pre-qualification letter. How long does the going through the DU approval and all that normally take?
It's same day approval on that.
Same day? Okay.
Right.
And they don't have to have all their documents at that time, but they do have to verify those documents. Is that what I'm hearing?
Yes.
Okay.
With the W-2s, the tax returns, pay stubs, all the list, the bank statements, all of that.
So it's a deeper look than the pre.
Well, that's what we're going to turn into underwriting, and that's probably what DU is going to ask us for. But,
okay.
And on occasion, my clients will send over their bank statements or their W-2s, especially if they're self-employed. I kind of like to look at tax returns on self-employed clients prior to any of this, because that can make a difference.
Make a big difference. The more information that you have, the better you can wield the client the proper product to. Is that not correct?
That is correct.
Okay.
That is correct.
So, well, I guess that brings me to my next question is, from application to closing, what's the typical timeline your clients can expect on, for example, one of these investor loans or a conventional loan or a FHA, federally government backed loan?
I would say 30 days is pretty typical in our market. You know that as well as I do. And there have been times when we do need a rush closing, and we're able to do that, case by case. The stars kind of need to align, because we might have to have a rush appraisal and a rush title. But as long as the borrower is on board with getting us everything immediately, I mean, we can do it in 3 weeks.
We never rush anything in real estate, do we?
No. We've never had a rush deal, Bru.
We've never had anything that has had to be done at the last minute in our career.
No.
You and I have worked together for a long time, and this is one of the things that I really do love about you. But tell people how you keep your client and your realtor informed throughout the mortgage process.
Well, we have milestones in our world, and we have our processors send emails to our agents and the borrower when it's submitted to underwriting, when we have a conditional approval, when the appraisal comes in, when the title's in. But at any given time, our borrowers have access to myself and my processors. So if there's questions, or the agents. So we are kind of on call, as you know, 24/7.
24/7. That's the way of the real estate world these days. I'm sure you've never had a difficult client before.
Never, not in 30 years.
How do you handle such scenarios? Because I know that's important for us as real estate agents to think about because when we hand one of our customers off to a lender, let's say, for example, maybe they have poor credit or they're looking at a specific type of property. How do you deal with those?
Well, we start with the credit always, because that's one of the first things that we do. And if we find out that the score is maybe lower than it should be, I have the ability to kind of counsel them a little bit. I'm not a credit counselor, but I've done it long enough to know. And if they have the wherewithal, maybe they just need to pay something down to get it below 30%. Or maybe there are collections on there that they could call and get removed, or maybe they just need to get a 30-day late removed. And a lot of times the consumer can do that on their own. If it's deep and it's ugly, I have the ability to send them to a third party that can help us. And I've got access to that. And they've done an awesome job for us. It can take 3 to 6 months to get it where it needs to be. But then I just tell you, here's where we are with the client, and we're working with them. And they keep me in touch so I can keep you informed.
I think that's really important to know, especially for folks that might have something they are concerned about on their credit report. It may be a concern, it may not be a concern, but even if you can't guide them through it, you have a third-party resource who actually physically does these types of credit repair situations.
Yes, basically that's exactly what it is credit repair. But if it's just paying down a credit report, a credit card or whatever, we can have a rescore done like in 5 to 7 business days. So, and we would do that before we actually locked the loan and submitted it.
That's pretty quick. That's pretty
quick.
Yeah,
it is good.
And you're saying your minimum down payments, you're looking at 3 and 3.5 on your federals. You know, you've got a various, I guess, on conventionals, and kind of explain how a lower down payment affects your interest rate on a conventional.
Well, the more you put down, usually the more improved your rate is. But when you put a minimum of 3% down, it's not going to increase the rate that much, but you are going to have mortgage insurance. Mm-hmm. So that's what you're avoiding when you put 20% down.
Right.
And your credit score also governs what the factor is that the mortgage insurance is going to be. So there's just so many different things, as you know, that go into this. And it gets a little confusing to the borrowers.
But the long story short is the more you put down and the better your credit score, the lower your rates are probably going to be.
Right.
And if you don't have those and you need some counseling, you may have the resources that can put those people in the spot to get them where they want to go. Even if they can't buy today, they might be in 6 months a year, they might be in the perfect position. So if you guys are out there and you're thinking about, okay, you know, I'm not sure if I can do this, you know, I'm nervous about this or that. And first of all, Carol Lynn keeps all your information confidential, I assume. Is that correct?
Absolutely.
I assume we all do that. We're all very, very careful about that. But, you know, she'll be able to help you get those steps taken to get to the mortgage process that you actually can purchase. And then, of course, if you don't, you have the other loans that are great for those.
I think that's one of borrowers' biggest fears sometimes, if they don't stay on top of their credit, because not everybody does. It's a scary thing thinking, oh my gosh, I just don't think I can do this. And it's really, normally they're much happier when we hang up because we find out they really can qualify.
Yeah, I find that a lot too. A lot of times folks won't say anything at all because they're afraid that something, first of all, everybody in their life has had some sort of crisis or something that they've gone through. So for those people that are worried about it from that, we've all had them. And, you know, talking about it and finding a solution is a great way to get forward and get what you want and actually pull yourself out of these situations as well. Because I mean, obviously home ownership is one of the greatest assets that you can possibly have, and certainly is an inflation hedge in the world of inflation that we think about. So let's talk about the rates themselves. How does the rate process work, and what happens if a closing is delayed?
Well, we have several investors that we sell to and that we broker our loans to, and our rates, as you know, especially lately, we price daily and they can change daily.
We saw a pretty big
hourly and have done lately, but we get the rates daily and price them as whenever they call us to do it.
All right, well, here's the $1 million question, is our last one, and it's, what are you seeing out there in the marketplace? What are buyers thinking right now?
Well, I think buyers are thinking that the prices are going to drop, and I don't know if that's necessarily the case in Atlanta. Yeah, in our area. You may agree with me or disagree with me. I don't know.
Well, what I see in that one is the inventory is so tight that we would have to have a tremendous amount of influx, and it would have to come from new construction in order to change those prices. And I don't see us being able to catch up with that anytime soon.
Well, anyway, I don't either. And I also think that, you know, we can't guarantee that if the prices drop, the rates are going to drop. So it's kind of if you're ready to buy and you need to buy, go ahead and do it, because everybody's going to be refinancing when they do drop.
Your situation is individual to yourself in every situation, and you can do rate buy downs and stuff like that as well, which you could talk to them on the counseling.
Oh, absolutely.
Are you hearing anything? Are you hearing anything specifically from the seller side? What are sellers saying about real market rates?
I think from the seller side, the sellers my agents that are the listing agents, they're getting multiple offers still.
Mm-hmm.
So that's another reason why this pre-qualification and pre-approval on the front end for the buyers is so important. I've got several borrowers right now that have been pre-approved for 6 months.
Mm-hmm.
And they've gone through several contracts and they can't get them. So, and things change in that 6 months from what they can qualify for now and what they could qualify for 6 months ago. So it's just our market in Georgia, I think.
Well, I mean, it's like this in a lot of your metro areas. There are some that are weakening. The South and the North, I think it's the South and the Southwest, are both experiencing very strong markets, whereas some of the weakening spaces are on the far West Coast and up in the Northeast as well. So that's a lot of great information, Carol Lynn. I really do appreciate you joining me today. It's number one, always amazing to see you. You've given us some great insight to the lending business. We really appreciate you being here. And as always, you guys, don't forget, if you have any comments or questions, be sure that you comment those below the video, and we'll be more than happy to get you the answers, or reach out to Carol Lynn or myself directly if you have questions about financing or real estate. We're here to help you in every way possible, and we're very happy to do so. Our phone numbers will be here in the video as well as in the description. And as always, if you did find this video valuable, give it a like and share it with your friends. And if you haven't already considered subscribing to my channel, do that and click that little bell button to be notified when those new videos come out, because we've got great content coming out all the time and you don't want to miss a single thing. Thank you so much for joining us today. I'm so glad that you were able to be here. And if you did like this video, I know you're going to love the next one that pops up on your screen.